All right, this is it. This is the last time we're going to see each other today. I know that sounds sad, but anyway, in about 16 or 15 minutes and 45 seconds, the Cow Guy closed, top of the hour, 1 Central, 2 Eastern. We have a great show today. We're going to change it up a little bit, do something different, but I think the topics are going to be something you're going to really want to hear. And again, that's going to be in about 15 minutes and 30 seconds. So I want to see you there, 1 Central, 2 Eastern. The Cow Guy closed. All right, let's take a look at these prices. Jump right in. Corn's up a dime. March is at $6.76 1/4 last. May's up 9 cents to $6.74. They're both about a penny off the high, so not a bad strong board. 4 1/4 cents higher for the D's corn. That's new crop. 5.90 1/4 is last. Let's take a little bit of a quick trip over to the soybean pit. When we used to have pits, we could do that. This is giving up the ghost here. We were up penny higher last time we met, so about 3 cents lower from that. Gets us at 2 1/4 cents lower now in that March contract. 14.88 is last there. And folks, that's just off the lows. All right, so we're giving up the ghost here. May's down 1.5 cents to 14.85 and a half, and that now is about that's about a penny and 1/4 off the lows. So we got to keep an eye on this one. Let's see what the new crop's doing. That would be Nove of 23. We'll bring that one in from the archives. It's 2 cents lower, 13.37 and a half. If we move over to see what the wheat market's got for us, Chicago wheat, the wheat in Chicago, that's up 14.5 cents to 7.34 and a half. That's the March contract. May's up 14 1/4 cents to 7.42 1/4. If we move over to see what's going on in Kansas City, that's the hard red wheat down there, the old HRW in KC. 17 cents higher in the front month March, 8.36 evens last. May is up 16 3/4 cents to 8.30 3/4. And then finally, well, not finally, let's take a look at spring wheat in Minneapolis. 16 3/4 cents higher there. March is trading at 9.04 and a half. Trying to put a 9 in front of the May. 8.99 is last there. That's up 15 1/2 cents. We're both close to the highs there in both, well, at least in May. About penny and a half off. All right. Finally, let's take a look at cotton. That's been lower all day. It still is 146 points lower to 85.93. Let's bring in our next guest analyst to finish up the day strong. That's Ted Seifried from Zaner Ag Hedge. Ted, thanks for being on for us. Well, we had some movement today. It's been a little bit of an interesting one. What are your thoughts here on what we've seen going on in the grains?
Yeah, first of all, Scott, you mentioned, jumping over to another pit. You remember when we'd have to go from the Merc to the board or the board to the Merc, and you literally have to walk 10 minutes.
Yeah, right,
but,
exactly right.
The good news there is at least you had either Ceres or Pazos waiting for you as reward afterwards. But anyways, as far as today is concerned, you've got mixed markets. The price action in soybeans just seems and feels really rather heavy, but corn and wheat seem pretty well bolstered. Corn really not far off of its highs. Corn's really being helped by wheat, and wheat is really being helped by this track of the storm that we're watching so closely. We don't like it quite as much as we did yesterday. So for all the fun selling that we saw yesterday, we're having a bit of short covering, it seems, here today. And again, corn is somewhat of a beneficiary of that. The other thing, too, is, if you look at a corn chart versus a soybean chart, soybeans, to use your term, really do seem to be giving up the ghost, both on a chart basis, but also just from the feel of the price action that we have. Corn hasn't really felt that way. And I think a big portion of that is, one, the strength of wheat today, but two, and maybe more importantly, is that we still have to get through the second season Brazilian crop before we can say that, all right, this global ending stocks number isn't really all that tight. If we do, however, get into that second season Brazil crop and we get halfway through and it's looking pretty good, well, then you can argue that corn doesn't need to be trading up here at these prices. But at least for the moment, there still is that weather risk in front of us that soybeans just don't have because, the second season crop in Brazil is corn. It's not soybeans. That first season soybean crop is getting harvested right now. And for the most part, we're hearing better than expected yields coming out of Brazil at the moment.
All right, so like a lot of other analysts, I'm getting the feeling just by listening to what you have to say, the risks still really lie to the downside for you rather than the upside. You're not ruling it out, but given the opportunity, you'd probably make sure you'd set a floor rather than put a ceiling in.
Yeah, I'd absolutely say that. Scott, we've been up here for a long period of time, and not to be too cliche, but the cure for high prices is high prices. Eventually, you get demand destruction. Eventually, you bring out all of the supply coming out of the woodwork. You're seeing that happen in that first season Brazilian soybean crop. It's just not sustainable. Plus, that inflationary undercurrent that we had so very strongly at this time last year has really kind of faded. Yeah, we still have inflation, but it's not bubbling up stronger and stronger every month. So you put all that together and you sort of feel like we're on borrowed time here, Scott, unless there's a major catastrophe down in South America. Yeah, we keep talking about Argentina, but that weather pattern seems to have changed for the better, at least temporarily. We'll have to keep watching that. But that second season Brazilian corn crop, if that goes really well, like I said, it becomes rather hard to justify the prices up here, at least until we get to our growing season, unless there's a major problem there too.
So are you setting some hedges now, or what are you doing to worry about that?
Absolutely. Yeah, I mean, we have been kind of, I like to say that, by the time you get to the Christmas holiday, I'd like to see 15 to 30% new crops sold, especially in corn, because a lot of times right after Christmas or right in that first week of the New Year's is your second highest peak of the year. Highest peak usually being in June or July, but that doesn't always happen. So yes, I've wanted to have producers fairly well sold. And in this year, even more so than other years, because I worry that maybe we won't get that higher high out in June or July.
All right, stay right there. We got to go pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge after this.